Hello guys, welcome to the Trading Parrot. After we have a very sneaky and tricky breakout from this weekend, people continue to wonder themselves whether this is an actual breakout or a fake out. After posting my video yesterday, I continue to see more and more whales depositing large amounts of Bitcoin into exchanges. What really is going on? Let's have a look. Guys, if this is the type of content that you like to watch, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I publish one of these videos. And if you feel like supporting the channel, make sure you watch the video until the very end and do not go anywhere without leaving a comment down below. That's really helping the channel to grow. On the weekly, we have a bullish and a bearish scenario. On the 13th of May, we close a bullish crossover on the stochastic RSI. That is the bullish case, because every time we get a bullish crossover during this full rally, we get a big push to the upside. And in regards to the weekly RSI, you can see that we are building here a low, then a lower low, and then we are starting to build this shape. And this is some sort of inverse head and shoulders forming on the weekly with a neck right at the level of 70. So the question is, if the weekly closes anywhere above 70, that's going to bring back another leg to the upside of the weekly. And that could be all that's needed to grab the liquidity above 73 and put on the table higher targets for Bitcoin. Now, on the weekly, the bearish case is that we are building a channel to the downside. So the momentum still so far is against us. We haven't had any touches here that define the upper level of that downwards sloping channel. And the bearish case is that we find a local top here and we continue building a leg to the downside. That will give us the point of reference that we need to build this channel and to start thinking about a breakout. Typically, after you lose a level like this trend line dotted in yellow and you form a channel to the downside, the first thing that you do is to form a local high here. Call it a dead cat bounce as well. And then after you get that ABC correction in this way, then you can start thinking, oh, this could be the bullish breakout that we need. Of course, everything in trading is about probabilities. So I'm telling you, I feel that the most likely scenario from here is a leg down. But I also gave you the bullish case. If we break above this and we close the weekly with an RSI above 70, that could signal that the dead cat bounce is not yet done and we can still make an all-time high. The same goes for the stochastic RSI. As you can see, this week we started rounding towards the downside. Stochastic RSI can start a week pointing up and have a bullish cross like this one here, but then it can still fail. Many channels, big, large channels in YouTube, encourage people to just take all bullish crossovers like if they were some sort of magical recipe. And here you can see on the 20th of December 2021, we have a bullish crossover fail and another bullish crossover fail once again. Of course, this was the beginning of the bear market, but halfway a bull run, you can still have one of those. And that doesn't mean that the bull run ends, but it can still fake out a lot of people. So this could potentially do something like this, come back into the oversold area and still make a higher high and go to the oversold area later on. Just make sure that you don't take for granted every single thing that other YouTubers are telling you. My main concern is that on the weekly and on the daily, almost every single candle in this area ends up with a wick to the upside, meaning that there is some sort of strong distribution going on. At the same time that bulls are trying to protect the level. But you can tell by looking at the candle action that there is a massive arm wrestling between the two sides. And it's not yet guaranteed that after the bullish breakout that we have on the daily is just going to succeed. The Big Whale Explorer has taken a little bit of a push back below here. That's just because the large whales have slowed down in their deposits, at least from the data source coming from into the block exchange. I'm going to look as well into other sources of what the whales are doing, because I think that right now the difference between a successful breakout and a failure, it's pretty much decided by what the whales are going to decide to do right here. If too many whales sell, there's nothing really you can do. If we look at the areas where the inflows are very high, you're going to notice two patterns. Whales tend to deposit large amounts when there is a massive crash. For example, in COVID, you see a massive spike. On FTX, in the middle of the bull run in 2021, from June to September, there were massive deposits as well. And that is natural because people get super scared. They think that the top was defined and that is the beginning of the bear market, and they just decide to pull out from the cycle. Now, if we focus on the past bear market here, you can see that there are massive deposits all the way until the FTX collapse. At least 4 large waves of capitulation. What you also can see is that since we started running from the bottom of the bear market into 73.5, the largest area of distribution is right at 73.5. Of course, that has slowed down, but what I'm showing you here is an exponential moving average of those deposits. If we look at the deposits itself, you can also tell that the peak of the distribution was in March, but still there are some large spikes here on the 28th of May, just a few days ago. And all these inflows, if the price hasn't crashed yet, is because they still haven't pulled the trigger. They might change their minds, maybe decide that the breakout is healthy and that they are not going to distribute this time, or they might leave that for later. I showed you yesterday in a YouTube short how many deposits we had on the 3rd of June. Started with 1,500, 5,000, almost 6,000 here, 1,000, 4,000, 1,000, and it continues non-stop, 3,000 at 10 p.m. Since then, we haven't had any more, but I guarantee you that if all these deposits into exchanges get executed into an actual sell, the price of Bitcoin will have a hard time holding even the 60s. We are talking about over $1 billion in sells. The potential move down that we are talking about is not just triggered by the deposits, it's also triggered by the amount of longs that we have in that region in terms of liquidity that could create a snowball effect as well. This continues to be a word of warning, not necessarily a call to exit all markets. You join this channel because you want to stay informed and you don't want to just buy and eat bullshit. Long-term holders are just going sideways. They are not yet fully involved in these breakouts. So we could say that maybe half of them are buying it and the other half are not buying into this breakout. If they were buying into the breakout, we will see a big spike in very few days of the long-term holding. And you will also see the short-term holding selling into the rally. If we look at FIRE charts, you can see that all the area from right above 70.7 towards 72.2 has a decent amount of ask liquidity. And since yesterday, a lot of that liquidity that was located at 74.8, all these optimistic sellers at very high prices have moved their liquidity closer to the price to a 71.8. Somehow they are starting to chase the price to short it. 1 million to 10 million whales are currently accumulating. So that's very interesting to see. We need to see if these large whales are going to have enough dry powder to break into this selling wall and continue to that 73 liquidity that is absolutely necessary to create the short squeeze that takes us into 75 or 80K. That's the recipe. But if those sellers from here manage to crush those large whales, they could perfectly create as well a correction. We're looking here at the inflows and outflows from Bitcoin spot ETFs. We have a big, large streak of buys around here. And only since the 28th, we started seeing some bearish moves in terms of the ETFs here, coming from Grayscale and from ARK Investment. If we compare those red candles here with the distribution that was around here coming from Grayscale, it's almost nothing. A move to the low 60s will liquidate 10 billion in longs, even though they look very well distributed and they are not massive spikes like they are on the top here at 72K. Still, if you liquidate the last 30 months of shorts, you barely liquidate half the liquidity that you have from longs. And that is a very important point, but it's not sufficient for the price to just decide to go again back to the 60s. It's not guaranteed, but it sets a very clear picture on where the big risk is right now. Guys, if you want to trade Bitcoin and altcoins, I suggest that you look up for a decent exchange. One example is OKX. I really like this exchange because it offers tons of different products, very good quality, signal bots, grid bots, DCA bots, all built into the platform. And if you decide to use the link in the description, there are 60,000 of a prize pool, and also you're going to be saving in trading fees. If you don't want to do KYC or you cannot access leverage trading where you live, I suggest that you have a look into BingX. I also have a link in the description with 6,000 in rewards. Thanks so much for watching. I'll see you on the next one. Take care. Bye-bye.